What's going on, YouTube? Chris here. Want to bring you all an update today of Bitcoin. Right now we're sitting at $6,727. We're down 0.21%. And what I want to share with you today, this is going to be out of my book, Chart Patterns by Thomas Bulkowski. And I did this last night with my Litecoin group of people, and they really seemed to like it. So what I wanted to do was go down through this and actually break down this ascending triangle on the 4-hour time frame for Bitcoin. And we want to see if we can identify this as an ascending triangle and also the odds of it breaking to the upside as well as the downside. So we're going to get into all this, guys. You like me covering this stuff, like, subscribe, hit that notification bell. I appreciate you all being here with me today. So number one, when we're looking for ascending triangles, look for peaks that top out near the same price. So we want a horizontal top, and that's going to be right here around that $7,000 area. You can see we had a wick here. We had several right in this area where we consolidated sideways for quite a few days. Then we also had it again up in this area where we actually had a false breakout, and we went up to almost $7,400 before coming back down. And that was one of those long leg doji candles or rickshaw candles where it was just really tight fight action back and forth between the bulls and the bears. You can see it really spanned a large distance here from about $7,300 all the way down to about $6,700. So that was a lot of fight between the bulls and the bears going back and forth there. But we would definitely identify number one as being a check mark, and we're just going to go through these. Number two, find prices that make higher valleys. Prices should touch an upsloping trend line drawn beneath the valley. So that's what we have right here. We have about 3 to 4 touches right in this range here. We could even adjust this a little bit more to get that touch. So we have a touch here, we have a touch here, we have a touch here, then closed up here. So we at least have 3. So we're good in that area. So we're 2 for 2. The next is going to be price much touch each trend line at least twice. So what we have down here, we have our 3 touches here, so that's no problem. And then our upper horizontal line here, which we have at least 3 touches up there. So far everything's working perfectly. The next one, it says prices must cross the chart pattern from side to side, leaving little white space within the body of the pattern. So that's this chop back and forth in here. We don't want big gaps of white spaces, or in my case here, it would be black because I use a black background, but we don't want a lot of huge spaces. This one, we got a little bit of a spot in here, a little bit up here, but for the most part, we have kind of chopped back and forth in this. So I definitely would qualify this as hitting that criteria as well. The next ones, the 2 trend lines converge at the triangle apex. So right now you can see we're getting to the apex right here. So it's just a matter of time before Bitcoin decides, are the whales going to step in and break us to the upside, or are we going to start breaking to the downside? The next one, volume trends downward 77% of the time from pattern start to the day before the breakout. So what you can see here, we had that really high volume, that climax volume that we had down in here when we had buyers after the climax dump, that capitulation. So now volume has been trending down as the price has been going up, and you can see how low the volume is now. So that's why we're waiting for this break. We're anticipating this move either to the upside or the downside. And I'm also going to put in alerts for us as well. And then it says a breakout occurs when price closes outside the trend line boundary. An upward breakout occurs 70% of the time, and a downward breakout is going to happen 30% of the time. So 70% of the time, you're going to make a nice strong move to the upside, and then 30% of the time, you're going to drop to the downside. So that's where we still have to prepare. And guys, remember, chart patterns are not confirmed until you actually have that breakout. A lot of guys will start buying once we break up through this upper horizontal line here to go long, and then to go short or to exit your position. If you're in a position, they will sell out at the break of this white trend line, this lower trend line right here. So now we're just really getting this squeezing effect, and the candles are extremely tight here, and we're waiting for that next move either to the upside or the downside. And that's what we have to be very aware of, guys. And what you also have to realize is that 57% of the time, if we do have a breakout to the upside, we're actually going to have what's called a throwback, and we'll come back 57% of the time and actually back test this horizontal line before we continue to move farther. And then about 49% of the time, we have what's called a pullback, to where it says in my book here that we'll actually break down through this white trend line, we'll pull back onto this trend line, or at least touch it again, and then drop even farther. So that's definitely something that we want to pay attention to as well. It says that tall patterns perform better than short ones. Tall means taller than 10.13%. So we're going to check this out for us overall. So what we'll do, we'll get our price range here. We'll go from the bottom of that wick all the way up. This is definitely what they would consider a tall pattern. So this is a taller pattern for us. And then it also talks about here that when we do have breakouts, Tall patterns, for example, have prices that rise 44% post breakout versus 30% for short patterns. So if we do get an upside breakout here and say we were to go 44%, what we're going to do here is go from basically the area where we would break out from, we'll go up 44%, and that would roughly put us, guys, right at this top here, right in this area of $10,000 if we do get a nice strong breakout from this ascending triangle. And then to the downside here, what we would look for is about a 37% to the downside. So we'll also take a look at this and we'll turn this green for us. See if that helps you guys. So let's get that green. And if you get some from this, guys, like, subscribe, hit that notification bell. Really appreciate you all being here with me today on a Saturday. And this is the type of stuff that I'll do on my own, and I'll go through and I'll say, hey, is this going to be an ascending triangle? And if it is an ascending triangle, what am I going to do with it if it breaks to the upside? What am I going to do with it if it breaks to the downside? It's where you always have to have a plan. So now we're going to go down 37%, and that would take us right to the bottom of this pattern. So that would be correct as well. Guys, right at the start of this, and we'll turn this one red. Just like that. So if we break to the downside, we could be looking at, $4,500 or so. If we break to the upside, we could be looking at $10,000. So that's why this ascending triangle is so important for us to get a nice strong move, in my opinion, to the upside so we can get out of this, guys. If we zoom out here and take a look at this, we have just been in a wicked downtrend for quite a while now. Ever since we got up to about that $14,000, that blow off top that we've had, we've basically just been having a downtrend since then, guys. It's just been pretty nasty. You can see the volume, how low it was down in this area as we were having those lower highs coming in and lower lows coming in. Volume was low, and as you can see, when we're in an uptrend, you're going to have those bigger swells of volume. You're going to have a big push up on volume, then the volume will dry up, then you'll have the next big push, volume will dry up. So it's just different working a bear market. But for us, we definitely need an upside break, and it may take even more time. We may even consolidate sideways for a few more days, but in my opinion, the break will be coming. I can't tell you yet if it's going to be to the upside or the downside. We have a 70% chance of it breaking to the upside, a 30% to the downside. You also have to factor in the throwbacks, the pullbacks, broken patterns or busted patterns. Sometimes you can actually have a strong move to the upside and then you break down through, or you can have a break to the downside, then you break back up. So there's all different types of scenarios that we need to pay attention to. So next, what I want to do here for us, I'm gonna get that off here, guys, and we're gonna put in our alerts now. I want to put these in for us. So to the upside, my alert's gonna be right on this horizontal line. Let me see here, guys. So we're gonna add on horizontal line right there, and we're gonna create that, and that's gonna be at $6,997. And then to the downside, I want to be alerted if we break this higher low here. So it's going to be at $6,101 right down in this area. So we're going to have our two alerts up in here, okay? So those are the ones we're going to be looking at, about $7,000 to the upside. To the downside, we're going to be looking at $6,101. So those are the alerts. And then I also want to take you out to TradingView here and show you what TradingView's doing in terms of calculating all this. So on the 1 day time frame right now, you can see how we're just a little more neutral. We're just waiting. It's just that waiting time. So we have a 10 for a sell, we have a 9 for a neutral, 9 for a buy, oscillators 2 sell, 8 neutral, 1 buy, moving averages 8 sell, 1 neutral, 8 buy. So you can see in the shorter term here, we're throwing buy signals. In the longer term, we have sell signals. Then we have a lot of mixture between neutral here, a lot more neutral, and then some buy and sell in here. So for me, this is just an area where you really need to be patient. I think patience is the #1 thing to pay attention to right now, and we have to wait for that confirmation to either the upside or the downside in terms of the breakout. So I wanted to bring you a quick one today here, guys, on a Saturday. Let me know if you like this, how I break it down. This is out of my book, Getting Started in Chart Patterns by Thomas Bulkowski. It's roughly about 300 pages. This is really good. This is a smaller version of my encyclopedia of chart patterns by Thomas Bulkowski that I like to use, but this is one that I'll actually carry around with me if I go somewhere and I want to do some study, and it's a little easier than the big encyclopedia, and it still has a lot of great stuff in it. So I would definitely suggest that to you guys, but let me know if you like me using that stuff. We break it down. So far, guys, this is definitely an ascending triangle. 70% of the time we break to the upside, 30% of the time we will break to the downside. The candles are getting tight, so anticipate that break. The volume is getting low. It's coming soon, guys, so be ready. God bless you all. Take care. Like, subscribe if you get something out of this. I appreciate you all being here with me today. Have a wonderful Saturday, guys. Take care.